Well, investors are giving themselves a bit of a break from thinking about the U.S. election, which of course is underway right now, and instead focusing on AI. Palantir continues to rip higher. It's up 20% right now. The volume of shares that have been traded less than an hour into the trading day is already at 7.2 million. For perspective, that is way more than what's been traded in NVIDIA right now, Supermicro and Tesla. So not only the best performing stock on the U.S. markets, but also the single most actively traded stock on the S&P 500. We won't be able to ignore the election for much longer. However, today is election day. We've actually got the volatility index pulling back a little bit right now. Will it stay there? Well, I guess that depends on when we get the results and what they are. John Stoltzfus is the Chief Investment Strategist and Managing Director at Oppenheimer Asset Management. John, it's been such a tremendous year for investors. Is that not just a reason to kind of take your toys and go home for a little while?
Amber, you know me, I don't think so. And in fact, if anything, we maintained our positions. And I'm looking today, our favorite sectors include infotech, industrials, consumer discretionary, communication services, and financials. And they are the leading 5 sectors today for the S&P 500. So we feel comfortable. We think that the market really cares about revenues and earnings ultimately. We think likely because of the conditions of the economy at present time and the likely conditions either under either administration, whether it is a Harris or Trump administration, because of innovation, we think that the market is likely to continue to go higher with occasional pullbacks, which are quite normal.
Now, that's a pretty risk-on portfolio, and you say the markets can continue to go higher. At what point do multiples make that sort of an untenable reality?
Well, I think that the thing about multiples is, it's revenue and earnings growth. And I think the challenge is always, can companies grow revenues and earnings growth? And as of the end of the week last week, we do it on a weekly basis. My recollection is that earnings for the S&P were up a little over 8% for the third quarter, which is a lot better than was expected. And my recollection is I think there were 3 double-digit earnings growth and 2 with negative double-digit earnings growth. And the earnings growth was favoring cyclicals. So we think what the signal that we're getting, Amber, at this point is that the U.S. economy, as a result of the Federal Reserve's highly sensitive policy and the rate hike cycle, and now the beginning of trimming their benchmark rate, as well as the condition of the balance sheets of corporations and the consumer, even as the economy slows, after 11 rate hikes and 9 pauses before we began the cut on September 18th, remarkably in good health. And we think that will, especially with an election, you've got to figure you've got a relief rally likely as we finish the questioning of who's going to win. And then likely in the first year after the inauguration, you usually get a bit of a honeymoon. 2026 will be the year that will likely be where we'll find more of a challenge.
Okay,
if
so
there is one.
What's underpinning that? Is that just historically the life of a bull market starts to run into issues around that time?
I think, when it comes to the elections, what we have to notice is in both the case of the Trump victory in 2016, as well as the Biden victory in 2020, it really was the relief rallies for both of those. And then after the inauguration, a very good, strong year in 2017 for Trump and in 2021 for Biden. And then the tough years were 2018 for Trump. It was less about policy from the administration. In that case, it was concerned that the Fed was tightening. It had begun to tighten December 2015, and it wasn't until December 2018 that it pivoted, okay? And for Biden, there was the honeymoon rally, there was the the inauguration year, a continuation, positive thinking. And then in 2022, the problem was 4-year highs on inflation, some of which was attributed to overstimulation by his administration. And that was a tough year then. So, we really do think that we're likely to see markets, they don't go up in a straight line, of course. But so long as revenue growth and earnings growth persist and margins appear defensible, okay, so in other words, they can be defended against the negative protection, we think the market is in good stead here.
Where do you go for downside protection, though? I hear your view, and I know you're risk on, but you've got to have something in there in case the view doesn't turn out that way.
Well, first of all, it always said, and our advisors are always looking to define what's recommended for private investors based on their experience, their tolerance to risks, their objectives and goals, of course. So there's no blanket recommendation. This is the outlook from the strategist's point of view, what we have here. And then it would be naturally could be custom designed for the private investor or the institutional entity. But in our case, when we look at this, it has to do with positionings, diversification, using some perhaps short-term treasuries, diversification perhaps in municipals, for instance. Should Harris win, taxes likely to go up. Should be good for municipals at that time. But in the meantime, we do not say, what we do say is we are overweight cyclicals, and not favoring defensives, but we still do own defensives. We just don't own them in an overweight status, related to things like consumer staples and healthcare, because we think those sectors, in the case of Staples is pretty rich, and healthcare has problems that both sides of the political aisle, stateside, are eyeing healthcare as a source to deal with in terms of cutting profitability in order to make it more affordable for the government to cover healthcare costs.
I hate to ask such a tortured question because it relies on a lot of what ifs, but I'm going to ask it anyway. And it's, what if the outcome is contended or contentious and not accepted by former President Donald Trump? So that assumes that Kamala Harris wins, but it's not really accepted. Does that matter? I mean, it matters for a bunch of things, but does it matter for the markets, that kind of volatility?
We would have to say any kind of that type of volatility, of course, will be like a problematic situation in the near term. But this is a democracy that is well established, and we do know that any pauses in terms of exiting on losses in an election, whether it was years ago with the bench ads in Florida, or later on with Trump's questions related to the 2020 elections. These things are digestible, if not easily digestible. But this is a country of a strong constitution and laws, and cooler heads always prevail. It doesn't mean that there can't be worrisome moments in it or worrisome days, but we can't help but think, that past performance is no guarantee of future results. But as Mark Twain once said, history may not repeat itself, but it often rhymes, and things do work out and things do move ahead.
All right. Thanks so much. A lot to consider. Thank you so much for joining us as John Stoltzfus joining us at Oppenheimer Asset